Hi everyone, welcome to Tuesday, and of course every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange, being the NZSX50. Now before I jump across and share my screen, just remember that this is for educational purposes only, certainly no way intended to be personalised financial advice, that you do need to go and have a chat to your own financial advisor. However, if you are wanting to learn about the share market or anything around finance, reach out to me. Happy to help, happy to do a video on it and share what I know and the methodology that I use. So let's take a look at the main board for the New Zealand Stock Exchange. Okay, so here we have the NZSX50 up on the screen. Now, the first thing that has stood out to me is that we've actually had 2 weeks in a row where I've got my cursor where the main board for the New Zealand Stock Exchange has actually closed lower than where it's opened. Where this is heading, I honestly don't know. It has certainly been a very challenging time for the New Zealand share market for quite some time, and I've certainly created videos on that. Let's just go and put on a moving average and just get an overall picture. So let's pop on, and we're going to make this 200 in this example, just because it gives us an overall trend. It's a slow moving average, and it just sometimes helps indicate perhaps what the market's doing. So at this stage, our market is trading above that 200 period moving average. So that could indicate that it is in an upward growth period, although it does tend to be just languishing and really not going anywhere at the moment. Let's change this and let's just make that our normal 30. And so the market is trading above that 30 moving average. So that is a good sign. I will also put on our 15-week moving average as well. The reason I use the 2 moving averages is because obviously the 15-week is a faster moving average than what the 30-week is. And that certainly helps give us an indication as to perhaps what's happening, because naturally the 15-week moving average is going to respond quicker to short-term events than that 30-week moving average is doing. So that's why I tend to like to use both, and it helps give me a better overall picture. So we can see here that that 15-week is trading above the 30. So that is a good sign. The little caveat I'm going to put on here is that if we can zoom in, you can see that it could be indicating that that 15-week moving average is about to turn lower. Only time will actually tell us what is going to happen in this market, but it does look potentially like it could be about to turn down. And especially if I look down here at the ATR, the average true range, that's definitely facing downwards, which could mean that the market is going to go down. Obviously, I'm not into guessing anything what is going to happen. The markets will actually tell us. But for me, because we've had 2 weeks in a row where the overall market has gone down, that ATR is facing downwards, for me, I do not even start to look at any shares for potential investment purposes, because for me, I want the market to be trending up, and I want to see that that's happening first before I start looking for individual shares. Now, I am holding shares. There are some very good, strong performers out there. There's 1 or 2 that have been outstanding this year for the New Zealand market, and Fonterra, to be honest, has been one of those. So I'm definitely holding them. It just means when I see what I'm seeing today, means that I'm not looking for any other investment opportunities. Now, over the weekend when I was doing my research for the Australian market also, exactly the same thing. They've had 2 negative weeks in a row on their all odds main board, and so for me that meant I wasn't looking for any other opportunities. Let's pop it onto the 1 year, which brings us down to daily candles, and just see how that's performing. And you can see here, look at this, we've had basically 3 days in a row, and this is looking like today. We've just opened, it's Monday the 4th, and already the market's down $94. So these 3 days in a row last week, the last 3 days, so Wednesday, Thursday, Friday, the market sold off. And you can now see that the market is actually trading below both of those moving averages. So that is definitely why I want to wait and see what is going to happen in the market. And some people think that because you're investing into the share market, that you've got to be investing in there all the time. And actually, sometimes not making an investment is making an investment. you don't, just because you might be into the share markets and into trading and into investing, it doesn't mean you actually have to take action every single time. Sometimes no action is actually taking action. So I'm just going to stop that there. For me, nothing exciting in our main board, but hey, come back on Thursday. We're going to take a look at Goodman Property Trust and see what we can find there. And just remember, if there is a share that you'd like me to review or anything, pop it in the notes, we'll reach out, and I'm happy to do a short video on that for you. So I hope that's helped. Until next week, take care.